suddenly like people are looking at gold and Bitcoin and wondering whether those are safer than US Treasuries. These are fair questions. These are fair questions because I think everything just got like thrown on the table there. And you have a lot of recession fears now in the US. Whether or not we're going to get one, I don't know. But I think this is in part what's driving, Rob, this sort of upside in gold. I actually personally bought a little bit more today because it was down. And I don't disagree with Goldman Sachs when they come out and say that it could be 4K this time next year, or UBS, United Bank of Switzerland, saying it could be 3,500 a year, 3,500 an ounce by year end. Only because if I'm a central bank, I might want to diversify a little bit. Maybe I'm kind of rethinking my treasury positions.
Yeah, I mean, I think, we've been talking about gold for a long time, and, there are a lot of drivers for demand for gold, and obviously it's very supply constrained, and it's becoming a more and more kind of must-own asset for central banks. And what's transpired over the last few weeks has really only, kind of taken it up a notch in terms of how important gold is as a non-sovereign, store of value reserve asset, particularly in light of what's going on in the Treasury market and with kind of the potential disintegration of global trade. So in a crisis, in crisis situations or even war-like situations, gold is money, right? That it's like gold is the pieces of paper that countries want to exchange with one another become less important and valuable in those contexts, and what ends up mattering is gold. So everyone's increasing their allocation. I think a lot of investors are looking back. I mean, I'm certainly looking back as an investor. I've always had gold exposure, but obviously I wish I've had a lot more gold exposure.
Sound like my husband.
It's totally outperformed.
I just wish I had more.
It's totally outperformed, not just recently, but over, as we pointed out the other day, over 20 years, it's outperformed the S&P 500 now.
Well, so I think at some point you do have to ask the question. We've showed this chart before of basically money printing, right? The printing press going, and then the corresponding value on gold. And what you saw was back when gold sort of tanked, that equation was totally out of whack. And you look at it right now and it's like in line, but you run the risk that it could get out of whack. I think that's when you're layering in all those sort of political headwinds that are driving gold higher. But at some point, as those things start to ease, maybe gold does come down. I don't know. I mean, I'm just a sort of long-term gold bull myself. The other thing that you might see is if the market really starts to bottom out, that people might take their gold or their Bitcoin or any, cash, right? Cash is king. You want to go in if you don't have the cash and buy those assets on the cheap. And so that potentially is a risk to the gold trade, or to, we can talk about Bitcoin too, as Piece of My Mind just brought it up.
Yeah. But, I think just the point is, like, a lot of people don't own enough gold. Private investors, central banks, it's not they're still growing. They're still looking back at what's going on here, and they probably on the margin want to grow their allocation, not shrink it. So, just from a supply demand perspective, sure, things can stabilize, and some of that risk aversion effect on the gold price could settle down, but and maybe gold could underperform in that context. But hard for me to imagine gold really retreating at this point, given the way the world has changed and sort of the direction of travel.
Sure. No, and look, Goldman originally had the call for 3,200, and we were like, wow, that's, and we could see that. And then, of course, we came and went right through 3,200. I think 3,250 or something was where we went. Just now, it was down a little bit today. Let me check gold right now. But I suspect that 4K is actually within the striking distance. Really pretty amazing. We're also just getting a headline crossing right now that the Trump administration is freezing $2.26 billion in funding to Harvard. This is hours after the university refused to agree to the government's demand. demands, plural, the demands being we want you to protect our Jewish students and all students on campus, and these protests that you've had and the DEI movement that you've had, et cetera, are not really leading to a sense of protection. So I just bring that up in passing. But back to what we're seeing here, Kevin Hassert now talking about the odds of recession. He was on with my former co-host Larry Kudlow on Fox Business today, and he's like, yeah, no, I don't see it happening. Let's hope he's right. Again, the gold trade may be telling us something slightly different, although heck, you know what? Gold's been triumphing alongside AI, so who knows? Here's Kevin.
Speaking of GDP, I think you mentioned GDP in the economy. You're saying there's 100% no chance of recession.
Right now, the data are so strong. You've seen the jobs numbers. And we also, as you know, when we're in the White House, we get to talk to CEOs and say, what are you seeing with your orders and so on? And people are really actually euphoric that things are moving way better than the media would have you believe. And so I'm not saying that you can't have a GDP number that's a little bit disappointing or surprising. GDP now still thinks that Q1 is going to be weak. But if you look at the blockbuster jobs numbers that we've been seeing and the low inflation, which takes all the pressure off for the Federal Reserve to be worried about they're going to have to act because of inflation, that it's really a sweet spot of growth right now. And I think it's going to be even better in the second and third quarter because Trump policies will be in place. But with the jobs numbers booming and people saying that they're seeing strong sales anecdotally, I don't see a recession at all.
All right. All right. There you have it. Kevin Hassett.
Okay. And he didn't push him on it. We are seeing, say, for example, in Polymarket, the odds increasing, though they've come down since that Liberation Day move of people thinking, maybe this happens. If it does, I would just say, look, the Fed's in a good position, right? Because the last two inflation reports have been relatively tame, and they're keeping their powder dry. They might be behooved to act like on time or a little bit ahead of schedule, dare I say, as opposed to waiting until the 11th hour and then having to print like there's, no tomorrow. But, this is the Federal Reserve after all. Do you think that that's not a call, if you would, from the White House to say, hey, go out and print, we run this risk? That's we got this all under control kind of perspective.
Yeah, I think he's putting, look, he's kind of speaking for the administration and putting an optimistic viewpoint on it. And I guess, there is some kind of momentum coming into this that he's pointing to that would kind of keep us afloat. But, it's important to remember, why are people talking about, why is Polymarket saying there's a massively higher chance of recession now as a result of these tariff policies? It's because the tariff policies, if they really got implemented, would be a tremendous tax on American consumers, and they would be very disruptive to the operation of businesses.
I was kind of thinking about it, remember the Soviet Union, you just couldn't buy anything. If you want to buy a pair of jeans, it would cost a fortune, right? Because you think about the denim that's made in one of these countries and, again, supply lines. And I realize people want to get all worked up about that. I'd say get worked up about the stuff that we're going to be completely, up a creek without a paddle in the event of some kind of real international conflict. That's what you want to really, really worry about. And so that's why I'm pleased, right, to see what NVIDIA said today, the $500 billion investment. I'm pleased to see what Apple's saying. We want as much high-tech manufacturing here on shore as we can possibly get. As for recession, if you shut off everything and you can't buy jeans, anywhere, you can't buy clothes, you can't buy simple things, then you run certain risks because everything would cost more.
Well, imagine we shut down interstate commerce we snapped our fingers and put enormous tariffs that effectively closed down interstate commerce in the United States. What do you think would happen to the U.S. economy? Right? It would, it's a very, all these interconnected supply relationships, and it would grind to a halt. And that's sort of what we're doing when we're effectively blocking trade with China with such enormous potential tariffs, or putting such trade frictions on just instantaneously. So that's why the market, did freak out. I would say, for people who are, supportive of the MAGA economic agenda, which I personally am, and I think there's so many great pieces to it. You've got, the promotion of AI, you've got deregulation, which I think is really maybe the most important leg, potentially tax cuts, shrinking the footprint of the federal government, so many good things. You put that all at risk when you, if we were to actually go down the path of jeopardizing the growth of the economy or the health of the economy, the health of financial markets, and sort of put the administration in a very weak position in the context of a potential recession. So I think the people who are supportive of the president should be, we need to have debate, and we need to pursue the truth, and we need to pursue the right policies. And hopefully what's going on here is we're, instead of really kind of looking to have tariffs in place, we're looking to kind of escalate to de-escalate. And the end goal is to get better trade terms with our partners and, get back to a focus on growth and, less of a focus on resolving trade deficits with countries that have, a lot of good reasons to be running trade deficits with us.
Yeah, no, I get it. And I think we said this, but piece of my mind pointing out that basically BRIC countries are out there buying up gold. And I think we were sort of articulating that. Central banks all around the world, right, looking at gold as that hedge, if you would, against U.S. Treasuries. Hopefully the U.S. Treasury it's so safe and secure. I mean, Bassett doesn't want that. Are you kidding me? Trust me, Scott does not want that on his legacy. He was all over the front page of every single newspaper that basically is putting everything on him right now. So he knows the pressure's on, and I think he's willing to meet that pressure head on and do the right thing. And that would not be, of course, I know it's fun to say, okay, well, we can just default on our treasuries. No, we can't. Okay, we can't. And so I don't think that that's on the table, but it doesn't change the fact that everybody now fears these things. They fear, around the edges, some kind of mini default. They fear total crazy inflation and a deliberate devaluation of the dollar so that we can inflate our way out of debt. I mean, these are the things that people look at